Are you qualified? Because you own $300 million worth of real estate.
We're
So
just getting started.
let's start at the beginning. Tell people, what is your name? What is your company? And what do you do?
So I'm John Cruz. I'm the managing director of Icon Realty Capital. We're here based out of New Jersey, and we have a satellite office in Florida. And we were founded originally as a real estate investment group. Our mandate from our investors was to go out there and buy condos, build multifamily buildings, do fix and flips, things like that, actually acquiring the real estate. And then we got into the lending business because around 2008, you guys saw what happened. And investors, if you ever had investor money in, they don't care. Market's good, congratulations, pay me. Market's bad, that's unfortunate, pay me anyway. So we had coupons that we had to pay, interest coupons that we had to pay, and therefore we got into the lending business, and we've been doing a combination of both ever since. And it gives us a unique perspective because a lot of times, to Michael's point, I always ask, everyone has a lender. What makes you so special? Everyone's a bridge lender. Fantastic. Ask your existing lender how much real estate they own. Most of the time, zero.
Amen to that. And I advise my partners all the time that when they're trying to make creative offers to real estate agents, ask the real estate agent, have you taken the creative financing continuing education class at the association? And 9 out of 10 of them have not.
Correct.
There is no sense in beating your head against the wall trying to explain creative financing to somebody who doesn't understand it.
Correct.
Exactly. So let me ask you, what caught your attention, and how did you get into the space of helping real estate investors fund deals?
So it's interesting because I grew up on Wall Street and I was a lender in that space, just in the business financing space. And what I was looking for was passive income. So of course you see all the seminars and things online, and real estate's a great way to do that. I chose intentionally to sit on the financing side because it's my opinion that real estate is a very good way to create that passive income as long as you know how the money works. So I wanted to get into it personally because I wanted to see how it looks for myself. But then my background always as a lender, we started our own fund, and I kind of designed our loan programs in a way where I would sign on them if I was the borrower. Because my thought process being, yes, I'm going to be a lender so I can figure out this side of the business, but ultimately we want to own the real estate ourselves, and everyone should want to do that. However, you can't do that generally unless you come from money or if you have a good financing partner who's going to be creative. So I wanted to sit in that space where I could find all the advantages for myself and then teach those advantages to other people so that we can all capitalize together.
Awesome. So when you're designing your loan programs, what's your thought process?
My thought process is with what I sign on it if I was the borrower. So I tried to design everything where it could be investor friendly because we were born as real estate investors and we transitioned into being lenders, but I never lost that side of it. I understood this is what it could look like. Here's what the borrower experience is going to feel like. And as a commercial mortgage broker, which is how I broke into this industry, I loved that my lenders would get back to me eventually with something. I just hated that they took 5 days to do simple math. So my thought process was, how do I make this more investor friendly? Can I get someone back an option to do a deal within 12 hours? That would be actionable, and would it work? Because from my thought process, it's just math. Here's the leverage constraint. Here's where we feel most comfortable. You should be able to put that in a spreadsheet within one conversation. And as long as the value comes back, okay, you should be fine. In most of the cases, it's real estate. It's not brain surgery, it's simple numbers, and does it track? And if it tracks, fantastic, according to the spreadsheet and the data that we have. And if it doesn't track, I'll encourage you to stay away, which I do more times than I'd care to admit, because I'm trying to make sure people don't hurt themselves. A lot of times they get emotionally wrapped up in a deal and it's like, this deal makes total sense. It doesn't pencil. It's off by 3 or 4 points, and those 3 or 4 points could put you out of the business. You got to be very, very careful. So my thought process is always, if we're going to do a deal together, it's kind of like we're married for 12 months potentially. So I want to make sure that this relationship is going to work out good, because I would like to see you again on the next one as often as possible.
Amen to that. And I think the majority of people that are going to watch this video, because this is August of 2023, anybody who's been in the business for less than 15 years doesn't understand what a down market looks like. And from somebody, myself, that actually lived through the last downturn, you're right. Protecting against what the property is going to be worth 3 years from now is where you need to be. Because if you're underwater now, you've got a problem. But if it pulls back, you bought it right, and now you're even, you're okay.
Correct. And then it will go back up eventually, and then that's just your upside, encouragement again. But to your point, in that example, you're able to weather the storm instead of losing the asset.
Exactly. So let me ask more specifically, because everybody that watches my videos is going to be either an investor who's beginning, an investor who's in the middle of their journey, growing their financial independence, and then there's players, the people that own several $1 million worth of real estate. So